The textbooks blame the Treaty of Versailles. They tell you Germany printed money because France demanded gold it did not have. They paint the Weimar Republic as a victim of Allied greed. This version of history protects the real architects. The German Federal Archives hold the Reichsbank minutes from 1919 to 1923. These documents reveal a different story. The central bank leadership made deliberate choices. They expanded the money supply at rates they knew would destroy the currency. They continued printing even when their own economists warned of collapse. Rudolf Havenstein, the Reichsbank president, wrote letters defending these policies. He called the printing presses a necessity. He watched the mark fall from 4.2 per dollar to 4.2 trillion per dollar. He never stopped the machines. This was not incompetence. This was structural policy, serving specific interests. The industrialists who held hard assets grew wealthier as the currency collapsed. The government erased its domestic war debts through inflation. The working class and the middle class watched their life savings evaporate in months. The Weimar Republic did not fail because of reparations. It failed because the monetary machinery operated to benefit debtors and asset holders at the expense of savers and wage earners. The inflation transferred wealth upward on a scale never seen in modern history. Welcome to Rashi Historical. We follow the money, trace the power, and expose the history they never taught you in school. This matters to you today. Every debate about the European Central Bank, every German objection to shared Eurozone debt, every Bundesbank policy statement carries the trauma of 1923. The Federal Reserve, the Bank of England, and the Bank of Japan all study Weimar as a warning. Your currency, your savings, your retirement accounts exist within systems designed by people who remember what happened when a central bank lost control. The price tags in Weimar Germany changed by the hour. Workers demanded payment twice daily because their morning wages became worthless by evening. A wheelbarrow of cash bought a single loaf of bread. Lifetime savings purchased a single postage stamp. The middle class did not blame the Reichsbank. They blamed democracy itself. 10 years later, they voted for Adolf Hitler. The documents tell us exactly how this happened. The money trail leads to the men who held the printing plates. The Reichsbank building in Berlin housed the most consequential printing operation in modern history. From 1921 to 1923, this institution manufactured economic destruction with bureaucratic precision. The process began with a simple mechanism. The German government needed money to pay its bills. It issued treasury notes. The Reichsbank purchased these notes with freshly printed marks. This transaction created new currency from nothing. Every modern central bank uses variations of this system. The distinction lies in restraint. The Reichsbank abandoned restraint entirely. In January 1919, approximately 33 billion marks circulated in the German economy. By January 1920, the figure reached 81 billion. By January 1922, it exceeded 122 billion. By November 1923, the money supply measured in quintillions. The Reichsbank minutes from this period show the leadership understood these numbers. They received weekly reports on currency circulation. They tracked exchange rates against the dollar, the pound, and the Swiss franc. They watched the mark lose value in real time. They printed faster. The internal justifications shifted over time. First, they blamed reparations. Then they blamed French occupation of the Ruhr. Then they blamed speculation. The printing continued regardless of the explanation offered. Understanding the flow of this money reveals the beneficiaries. When the Reichsbank created new marks, these marks entered the economy through government spending. The government paid salaries, purchased supplies, and serviced debts. The first recipients of new money spent it while prices remained low. By the time this currency circulated through the broader economy, prices had risen to reflect the expanded supply. This was not random. This was wealth extraction through monetary infrastructure. The industrialists understood this mechanism. Hugo Stinnes, the wealthiest man in Germany during this period, borrowed massive sums in marks. He purchased factories, mines, newspapers, and shipping companies. When the currency collapsed, his debts became worthless. His hard assets remained. Stinnes did not gamble on inflation. He knew it would continue because he maintained relationships with the men controlling the printing presses. The Reichsbank leadership came from the same social circles. They attended the same clubs. They shared the same assumptions about whose interests the monetary system should serve. The records show the Reichsbank extended direct credit lines to industrial conglomerates at the same time it printed money to cover government deficits. This created a two-tier system. Industrialists accessed cheap credit and converted it to real assets. Everyone else watched their savings dissolve. The concentration of economic power accelerated during the inflation years. Small businesses failed. Large conglomerates absorbed their competitors. The competitive landscape simplified into a collection of massive industrial combines controlled by a handful of families. This outcome was not accidental. The monetary policy created the conditions. The incentives favored those with access to credit and hard assets. The machinery of money creation doubled as a machinery of wealth transfer. Foreign observers documented this process in real time. John Maynard Keynes wrote about the German inflation as it unfolded. He noted the deliberate quality of the policy choices. He warned other governments about the consequences of debasing their currencies. His warnings went unheeded for decades. The extraction continued until the currency held no value at all. Rudolf Havenstein served as Reichsbank president from 1908 until his death in November 1923. He oversaw the complete destruction of the German mark. His correspondence and public statements provide a window into the mindset behind the catastrophe. Havenstein came from the old Prussian bureaucratic class. He believed in order, procedure, and institutional authority. He did not see himself as a destroyer. He saw himself as a manager facing impossible circumstances. His letters reveal a man caught between competing pressures. The government demanded money. Industry demanded credit. The Allied powers demanded reparations. Havenstein positioned himself as a servant to all these interests, printing currency to satisfy each constituency. The structural problem with this approach was obvious to his own staff. Internal Reichsbank memoranda from 1921 and 1922 warned about the velocity of money creation. Junior economists pointed to historical examples of currency collapse. They recommended restraint. Havenstein rejected these warnings. His letters explain why. He believed stopping the presses would cause immediate economic collapse. Factories would close, workers would riot, the government would fall. He chose gradual destruction over sudden crisis. Each day of printing made the next day of printing more necessary. The debt grew, the currency weakened. The printing accelerated to compensate. This created a feedback loop with no exit. The Reichsbank became trapped by its own policies. Havenstein understood this trap. He wrote about it with surprising clarity, yet he continued operating the machinery of inflation until the day the mark became worthless. His correspondence with industry leaders shows a different dimension. Havenstein coordinated directly with major industrialists about credit policy. He understood their preference for inflation over deflation. Rising prices allowed them to increase revenues while their debt burdens shrank in real terms. The bottleneck in the system was the Reichsbank itself. All currency creation flowed through Havenstein's institution. He served as the gatekeeper. His choices determined whether the printing continued or stopped. He chose to continue. The physical logistics of printing money became absurd by 1923. The Reichsbank employed over 1,700 printing presses. It contracted with 133 private printing firms. It consumed vast quantities of paper. It employed entire teams devoted to nothing except adding zeros to banknotes. Havenstein took pride in this operational efficiency. He wrote about the logistical achievement of producing enough currency to meet demand. He missed the fundamental absurdity of manufacturing worthless paper at an industrial scale. When critics called for his removal, industry leaders defended him. They understood his value. A more orthodox central banker might have stopped the printing. Havenstein guaranteed the inflation would continue. He died on November 20th, 1923, 2 days after the introduction of the Rentenmark stabilized the currency. His death came at the precise moment his policies finally ended. Some historians call this coincidence. Others see a man whose purpose expired alongside his currency. The Reichsbank records show Havenstein received regular reports on the human cost of inflation. He knew families were starving. He knew savings were disappearing. He knew the middle class was being destroyed. He kept printing because stopping seemed worse. This calculation, repeated daily for 4 years, converted a monetary crisis into a civilizational catastrophe. The German middle class entered 1914 as the backbone of European bourgeois society. Teachers, doctors, lawyers, civil servants, shopkeepers, and skilled craftsmen formed a stable social layer between the industrial working class and the aristocratic elite. By 1924, this class no longer existed in recognizable form. The hyperinflation had extracted their wealth completely. The mechanism of destruction operated through savings. Middle-class families accumulated capital in bank accounts, government bonds, insurance policies, and fixed-income investments. These instruments promised returns denominated in marks. When the mark died, these promises became worthless. A family with 100,000 marks saved in 1914 held substantial wealth. This sum represented years of careful accumulation, perhaps a lifetime of work. By November 1923, this amount purchased less than a single loaf of bread. The insurance industry collapsed entirely. Policies purchased over decades paid out sums insufficient to buy a newspaper. Widows and orphans, supposedly protected by the premiums paid by their deceased relatives, received nothing of value. Pensioners faced the most brutal outcome. Civil servants who had devoted careers to the state received monthly payments denominated in marks. These payments arrived on schedule. They purchased nothing. Retired teachers starved while their pensions arrived punctually. The documentary evidence from this period captures individual tragedies at scale. Newspaper archives show advertisements for middle-class families selling heirlooms for food. Court records show elderly professionals convicted of petty theft. Cemetery records show increased death rates among the educated classes. Contemporary accounts describe professionals begging in the streets. A judge traded his judicial robes for potatoes. A professor sold his library book by book to feed his family. A doctor accepted chickens as payment because currency held no value. The psychological impact exceeded even the material destruction. These families had believed in the system. They had saved responsibly. They had followed every rule. They had trusted institutions. Their trust was betrayed completely. The shame of poverty compounded the suffering. Middle-class culture emphasized respectability and self-sufficiency. Accepting charity or performing manual labor carried stigma. Many families hid their desperation until starvation made concealment impossible. Young people from these families lost their inheritance and their prospects simultaneously. The investments meant to fund their education evaporated. The family businesses meant to employ them collapsed. The social networks meant to advance their careers dissolved as everyone competed for shrinking resources. This generation entered adulthood with nothing except grievance. They had witnessed their parents' ruin. They had seen the system fail catastrophically. They sought explanations and assigned blame. The official explanations blamed foreign powers. The Treaty of Versailles and French reparation demands became the public scapegoats. This narrative had some factual basis. Reparations did pressure the government budget, but the middle class experienced inflation as a domestic betrayal. The Reichsbank was a German institution. The printing presses were located in Berlin. The decisions were made by German officials. The beneficiaries were German industrialists. The foreign scapegoat narrative distracted from domestic culpability. It also failed to satisfy those who had lost everything. If Germany was the victim of foreign powers, then German institutions had failed to protect their citizens. This logic led to rejection of the entire republican system. The Weimar Republic became associated with humiliation, poverty, and betrayal in middle-class memory. The democratic parties that governed during the inflation years carried the blame regardless of their actual policies. A political vacuum opened. The middle class sought new leadership untainted by association with the catastrophe. They wanted revenge against those they held responsible. They wanted restoration of the social order they had lost. These desires made them receptive to radical politics. The infrastructure of democratic capitalism had failed them. They became willing to consider alternatives. The Weimar Republic was born in defeat. It carried the burden of surrender, revolution, and the Treaty of Versailles from its first days. The hyperinflation added economic catastrophe to political stigma. By 1924, the Republican form of government had lost legitimacy in the eyes of millions of German citizens. This loss of faith created the preconditions for authoritarian alternatives. The connection between monetary collapse and political radicalization operated through multiple channels. The most direct channel was simple discrediting. The government had failed to protect its citizens from economic disaster. This failure undermined all claims to competence and authority. German citizens asked obvious questions. If the Republic permitted the destruction of the currency, what other failures would it permit? If the government could not maintain basic economic stability, why should it be trusted with anything else? These questions had no good answers. The moderate parties governing during the inflation years defended their choices as necessary responses to impossible circumstances. This defense sounded like excuse-making to those who had lost everything. The second channel operated through the destruction of social trust. Market economies require confidence in contracts, savings, and future payments. When currency collapse voided these arrangements, citizens lost faith in the entire framework of economic cooperation. Neighbors who had lent money saw those debts become worthless. Landlords who had accepted long-term leases received payments denominated in fantasy currency. Workers who had negotiated wage agreements watched their purchasing power vanish between paychecks. Every broken expectation became evidence against the system. The accumulated disappointments created a society of cynics. Nothing worked as promised. No institution kept its commitments. Trust evaporated alongside the currency. The third channel operated through class resentment. The inflation did not affect all Germans equally. Those with hard assets prospered. Those with paper assets suffered. This divergence created visible inequality during shared national suffering. The middle class watched industrial magnates grow richer as they grew poorer. They saw speculation rewarded while frugality was punished. They witnessed a moral inversion where the prudent suffered and the reckless prospered. This experience convinced many Germans that the economic system was rigged. The rules favored insiders with connections and information. Ordinary citizens followed the rules and lost everything. Elites broke the rules and accumulated fortunes. This perception was largely accurate. The inflation did function as a wealth transfer mechanism. Those with leverage extracted value from those without. The gatekeepers of the monetary system served themselves first. The fourth channel operated through media and propaganda. Political movements opposed to the Republic used the inflation as evidence of conspiracy. They blamed Jews, international bankers, Marxists, and the Allied powers. They connected these groups through elaborate theories of coordinated sabotage. These theories found receptive audiences among the dispossessed. People who had suffered inexplicable losses wanted explanations. Complex monetary policy provided no satisfying narrative. Conspiracy theories offered villains and suggested remedies. The Nazi Party emerged from this environment. It offered simple explanations for complex catastrophes. It identified enemies to blame. It promised restoration of German greatness and punishment for those responsible. In 1923, the Nazi Party remained a fringe movement with minimal electoral support. The hyperinflation did not create immediate Nazi success. The stabilization of the currency in late 1923 actually reduced radical appeal temporarily. But the damage to democratic legitimacy remained. The memory of betrayal persisted. The grievances continued to seek outlets. The infrastructure of resentment waited for activation. When the Great Depression arrived in 1929, Germans responded differently than citizens of other countries. They had already experienced economic catastrophe under democratic government. They had already lost faith in Republican institutions. They had already identified scapegoats and developed appetites for radical solutions. The Nazi breakthrough in the 1930 elections drew support disproportionately from those regions and classes most affected by the 1923 hyperinflation. The correlation was not coincidental. The inflation had prepared the ground. Adolf Hitler launched his first attempt to seize power in November 1923. The timing was not accidental. He understood the hyperinflation had created revolutionary conditions. He believed the moment had arrived for armed insurrection. The beer hall putsch failed. Hitler was arrested, tried, and imprisoned. The Nazi Party appeared finished. This apparent failure masked a more significant reality. The putsch demonstrated Nazi ability to mobilize support during economic crisis. It showed the party could attract followers from the desperate middle class. It revealed the weakness of Republican institutions under pressure. Hitler used his imprisonment to write Mein Kampf. This text laid out his ideology, his methods, and his targets. He dedicated substantial attention to economic issues, particularly inflation and its causes. His analysis blamed the usual suspects. International Jewish financiers had allegedly orchestrated the currency collapse. The Republican government had served as their instrument. The German people had been victims of coordinated attack. This analysis was factually wrong. The Reichsbank leadership was not Jewish. The industrialists who benefited from inflation were predominantly Christian Germans. The policy choices reflected domestic politics, not international conspiracy. But the analysis was politically effective. It transformed economic grievance into racial hatred. It directed anger away from actual beneficiaries toward designated scapegoats. It offered simple enemies in place of complex causation. The Nazi Party rebuilt during the mid-1920s. It developed organizational infrastructure, propaganda techniques, and political strategy. It recruited members from those who had lost most during the inflation. Party records from this period show the social composition of early membership. Small businessmen ruined by the inflation joined in disproportionate numbers. Professionals whose careers collapsed after 1923 provided leadership cadres. Young men who came of age during the catastrophe supplied street-fighting manpower. The stabilization of 1924 and the relative prosperity of the late 1920s reduced Nazi electoral appeal. The party received minimal vote shares in the 1928 elections. It appeared politically marginal. The Great Depression changed everything. When unemployment spiked and banks failed, Germans reached for familiar narratives. The inflation experience had taught them institutions could not be trusted. The inflation memory had prepared them for radical solutions. The Nazi vote share jumped from 2.6% in 1928 to 18.3% in 1930 to 37.3% in 1938. This trajectory reflected the reactivation of inflation-era grievances under new economic stress. Electoral analysis shows the pattern clearly. Regions with the highest inflation-era distress voted most heavily for Nazis during the Depression. Age cohorts most affected by 1923 showed strongest Nazi support in 1932. Occupational groups that lost most in the hyperinflation demonstrated highest rates of Nazi membership. The hyperinflation did not directly cause Nazism. A decade separated the currency collapse from Nazi electoral success. Many intervening factors shaped the outcome. But the inflation created necessary conditions. It destroyed faith in democratic institutions. It created reservoirs of resentment. It established scapegoating narratives. It demonstrated that revolutionary change was possible in Germany. When Hitler came to power in 1933, he inherited a population prepared by previous catastrophe. The middle class had learned not to trust savings or institutions. The working class had learned to demand strong leadership. The elites had learned that desperate populations would accept authoritarian solutions. The Reichsbank's printing presses had done more than create currency. They had created the psychological conditions for dictatorship. The hyperinflation of 1923 ended a century ago. Its effects continue to shape monetary policy on two continents. Modern German economic culture carries the trauma visibly. German households save at higher rates than other Europeans. German politicians emphasize price stability above other goals. German media treats any hint of inflation with disproportionate alarm. The Bundesbank, established in 1957, operated under a mandate focused primarily on price stability. This focus distinguished it from central banks in the United States and Britain, which balanced inflation control against employment and growth objectives. The Bundesbank's orthodoxy reflected institutional memory. The men who designed post-war German monetary policy had lived through the hyperinflation. They had watched their parents' savings disappear. They had witnessed the political consequences of currency destruction. They built an institution designed to prevent repetition. The Bundesbank maintained independence from political pressure. It resisted deficit financing. It kept interest rates higher than other countries. It prioritized stable money above all other considerations. This approach delivered results. West Germany experienced the Wirtschaftswunder, the economic miracle of the 1950s and 1960s. The Deutsche Mark became one of the strongest currencies in the world. German industry rebuilt and thrived. The success reinforced the lesson. Sound money policy produced prosperity. Inflation produced catastrophe. The experience of 1923 validated perpetual vigilance. When European leaders designed the euro in the 1990s, they confronted German monetary memory directly. The Germans would not join a currency union that permitted inflationary policy. The entire structure of the European Central Bank reflects German demands for price stability. The ECB mandate prioritizes inflation control more strictly than the Federal Reserve mandate. The Eurozone treaties prohibit direct central bank financing of government deficits. The Stability and Growth Pact limits government borrowing. Every one of these provisions traces back to 1923. German negotiators demanded safeguards against repetition. Other European nations accepted these constraints to secure German participation. The consequences of this structure became visible during the European debt crisis of 2010 to 2015. Southern European nations faced severe recessions. Their governments wanted to borrow and spend to stimulate recovery. The Eurozone framework prohibited this response. German officials insisted on austerity instead. They argued loose monetary policy would lead to inflation, which would lead to political instability, which would lead to catastrophe. They cited Weimar as justification for policies that increased unemployment in Greece, Spain, and Portugal to Depression-era levels. The Southern Europeans pushed back. They argued the German obsession with inflation reflected trauma rather than analysis. They pointed out that the actual economic conditions of the 2010s bore no resemblance to 1923. They accused Germany of imposing its psychological disorders on the entire continent. This debate continues today. Every ECB policy decision occurs within the framework established by German memory. Every discussion of Eurozone fiscal integration confronts German resistance rooted in hyperinflation experience. You live within this system whether you recognize it or not. If you hold euros, your currency reflects German monetary philosophy. If you invest in European markets, your returns depend on ECB policies shaped by 1923. If you follow global economic debates, you encounter arguments first developed in response to Weimar collapse. The Federal Reserve also studies Weimar. American monetary policy includes safeguards designed with German experience in mind. The prohibition on direct treasury financing by the Fed reflects lessons from Reichsbank history. The emphasis on central bank independence draws from analysis of Havenstein's capture by political pressures. When the Federal Reserve expanded its balance sheet dramatically during 2020 and 2021, critics immediately invoked Weimar comparisons. They warned quantitative easing would lead to hyperinflation. They predicted currency collapse and political radicalization. These predictions proved wrong, but they demonstrated the persistence of 1923 in economic imagination. A century later, the German hyperinflation remains the primary reference point for monetary catastrophe. Every central banker operates under its shadow. The documents in the German Federal Archives offer lessons for current policy. They show how quickly monetary stability can unravel when political pressures override sound practice. They demonstrate the distributional consequences of inflation, with asset holders gaining and savers losing. They reveal the political aftermath when citizens lose faith in institutions. The Reichsbank minutes are not ancient history. They're operating manuals for disaster, studied by every serious monetary economist and central banker. The correspondence of Rudolf Havenstein provides case studies in institutional failure, taught in graduate programs worldwide. Your savings exist within frameworks designed to prevent repetition of 1923. Your government operates under constraints shaped by the Weimar experience. Your economic future depends on institutions that carry the memory of what happens when money dies. The German hyperinflation destroyed a currency, a class, and a republic. It created conditions for the deadliest regime in human history. It killed tens of millions through the war and genocide that followed. The printing presses stopped running a century ago. The consequences continue to compound. The ledger of 1923 remains open. You live in the world it created.